Good morning, everybody. Hey, welcome to Thursday, the 7th of March. Hope your week's gone well. Hey, as we look at yesterday, we had a nice green day, trying to bounce back for the week, but we got 2 more days to go. We'll see how that kind of feathers out as we have jobs reporting today and a productivity number supposed to come out this morning. So, hope going well. Glad you're with us again. Dave will join us here in just a few seconds. Hey, before we do that, though, let's not forget that in this world we live, there are so many things that we really have no control over. You can take control of your investment portfolio, your retirement portfolio. Through our core retirement design, it helps you identify the amount of risk you have in your portfolio, and it compares it to the amount of risk you technically should have in your portfolio based on your current circumstances. You know, the closer you get to retirement, the less risk you should have in your portfolio. That's why I developed the core retirement design. Give us a call at 863-382-0037. Hey, with that, we got Dave coming up next.
105.7 Light FM. Almost let the record run out because, well, Phillip, Statler, and I were trying to figure out what's going on today. And sometimes it can be confusing. It's time to check in on your money and find out what's going on Wall Street. So here we are this morning. Phillip Statler from Statler Financial Services is on the line this morning. Phillip, good morning. It's good to hear your voice today.
Hey, good morning, Dave. Good to be here. It is Thursday, and we're about to finish up the first full week of March. That's just hard to believe.
Yeah, which means we're going to have a big day tomorrow with the unemployment rate, and it's probably something even more than the economists are watching. The politicians are going to be watching it too. It inches upward. Trump's going to make hay out of it. It continues to go downward. Biden's going to tell us it's all because of him, and then the economists will digest it, and the market will go crazy if it's a big change. Fair summation?
Fair enough, but looking at some of the numbers we're seeing, I just don't expect a big change.
It doesn't look like it, really. I mean, based upon what we're seeing this morning, started out yesterday. I gather the Challenger job cut report was lower than it was expected. I didn't see the actual number, but I gather it was a pleasant surprise.
Let me see. It was actually no change.
Okay. That was lower than expected then, because we keep talking about the doggone layoffs in the tech sector, and we all figure that, oh my gosh, we're all going to see this great big increase. I've always said so many of them are out in California, and they've got that law that may be very good for the people, but whether it's good public policy is up for a lot of debate. You got to pay these birds like 90 days notice when you cut their job off. Well, almost anybody in a market like this can find a job after 90 days. So really, they never seem to show up on the unemployment rolls, do they?
Well, that's true. That's true. Even though we hear a lot about layoffs, they definitely doesn't seem to be reflected in that number.
Yeah, and I mean, okay, fine. There's weird ways in which the federal government calculates unemployment, but eventually you expect it to get up. Talking about unemployment, first-time unemployment claims, the usual Thursday report out this morning. Last week we were 215,000, according to what I had. 217,000 today. We're staying abnormally low. That's good news if you're looking for a job, because basically there's more jobs than there are people looking for them still, aren't there?
Well, that's true, and that's good for the folks hunting for jobs. Definitely keeping wages up and all those type of things. So it is it's still a relatively low number that we would like to see. Unfortunately, we'd like to see it up because that's what the Fed wants.
Yeah, and the rule of thumb I've always heard is 250,000 is kind of the normal sifting and winnowing in an economy. I don't think we've seen that in feels like 100 years. Yeah, it's been a spell. That didn't seem to do anything for Jay Powell in front of Congress yesterday. He did his first of 2 days up against the bloviating windbags in the House, and they didn't goad him into saying anything stupid. The market was fairly pretty quiet yesterday, everything being relative. Evidently, they didn't goad him into saying anything particularly importune, did they?
No, I mean, a couple of little things that I saw, little blurbs, was it was actually one of his more boring presentations.
We like boring when it's a central banker. Basically, the picture I drew was that he essentially didn't change anybody's expectation. Yeah, interest rate cuts are coming, but probably not until later on this year because inflation isn't under control yet. That was kind of backed up by the European Central Bank this morning. They made their interest rate decision for the quarter, and they've decided to keep it on hold and pretty much set up about the same thing that Powell's been saying. Cuts are coming, but we're going to hold steady for the moment. They kind of held out hope that it might go down in June. That's a little earlier than we're expecting.
Definitely earlier than I'm expecting anyway. And I think that, yeah, them holding interest rates consistent and not making any changes was probably a good thing. I know I saw earlier in the week that England, the Bank of England, did the same thing. Even though, and I didn't really realize this at the time, that England is in a recession right now. I hadn't really seen that number pop up, but in the little article I read said that they're in a recession, but they held interest rates the same over there as well this week.
I mean, they're biting a pretty good-sized bullet because in England, in the parliamentary system, they could be forced to call an election at any time. So when their central bank decides to kind of fight upstream, there's some political costs involved in that.
Yeah, I never could quite understand that. I was just going to say, I never could quite understand that government system.
Yeah, I mean, parliamentary systems can be interesting. Things can fall apart, and you can have an election on no notice. We're kind of stuck with the same leadership until regularly scheduled elections, or whether it's good news, if you're happy with them, you got them anyway. They're secure at the very least. Other tidbits coming out this morning before we get to the report. I found this interesting. New York Community Bank needed a little bit of help. A group led by former Treasury Secretary Steven Mnuchin put $1 billion into the bank, some new liquidity at the price of $2 a share. Are we done with the banking crisis? Maybe not, huh?
I don't know. I mean, there's a big headline. I haven't had a chance to read it yet. This is why private equity has been involved in every single recent bank deal there's been.
And what a big one, like anything with New York in front of it, generally implies it's a substantial-sized bank. It caused my eyebrows to go up at the absolute least. I guess we're going to have to start watching the regionals again.
Yeah, I think so. Hey, did you see this, Dave? I want to throw this in real quick. We did have a record-breaking event yesterday.
What was that?
Gold hit an all-time high.
Oh, you're kidding me.
Yep.
I didn't realize, but you're right. You know, it seems like it was decades that we were waiting for it to hit 2,000, and now all of a sudden it's well above it, isn't it?
Yeah, right now it's on my ticker. It's at $2,168. I think it closed. Well, I think it hit an intraday high yesterday. I want to think it like 2172 or 2173 is an intraday high yesterday.
That's intriguing. I'm not lucid on metals futures. I look at them and say, oh, that's about where I'd expect it to be, but I didn't know that we were that close to record territory with spikes we've had over the years. That's intriguing.
Yeah.
Talking about intriguing, this is kind of a retail week. A whole lot of brick and mortar stores, including grocery giants like Kroger. How did they end up doing?
So Kroger looks like had a decent quarter. They earned $1.34 a share versus $1.13 that was expected. Revenue was just a little bit below rather expectations, but just marginally. And so they're getting a nice little bump this morning, up almost 5%.
Woo! I was talking before we went on the air. There was a report over the weekend. One of the big things Kroger wants to do, and I cannot remember whether it's their nationwide grocery delivery service or the big merger that's been on the table with Kroger and one of the other big chains. I know they had a setback in the Justice Department on that. Evidently, that didn't hurt their stock price anyway yesterday.
No, sure didn't.
Glad to hear it.
They were up. Yeah, they were up 2% yesterday and up another 4.5%, 5% this morning.
Take that happily. What else have we got on the table?
So the other thing, we got a couple other retails. We got American Eagle Outfitters reported. They did well. They beat by about 11 cents a share, came in at 61 cents a share. The revenue was basically in line, slightly above expectations, but for all intensive purposes, in line with expectations. Now they're getting a big jump, up 12% this morning. They did have a big write-off in their financials due to a logistics center where they had bought some shipping companies, and they basically have disbanded that. It's like a $93 million write-off, but their operations were good last quarter.
Wow. Premium retail is surviving nicely.
It is. It is. I didn't see the exact numbers on this one, but it's a big loser, so it's worth mentioning today.
Absolutely.
Victoria's Secret, they issued disappointing guidance on their first quarter and their full year. Their revenue for the year, they expect $6 billion. The expectation from the analyst was 6.2 billion. And they guidance missed on a lot of estimates as well. They're getting hammered this morning, down 29%.
Premium underwear does not sell when things are tight, evidently. Got one more?
Let's see if I can scroll through here and see what we've got. That's really it when it comes to earnings, Dave.
All righty. Well, we'll set the table then. Yesterday was kind of a recovery day. We didn't gain back everything that we lost the day before, but it was all green. Dow ended up by about 76. The S&P ended up by 26. NASDAQ up over 0.5%, up $91.95 at the close. 45 minutes before we opened this morning, what are we looking at?
Dave, it looks like the indexes are going to continue off of yesterday's green ink. The Dow is up 0.3 right now, and the S&P 500 is up almost 0.5 point. The NASDAQ 100 is up 6%. The Russell 2000 is up almost 0.5% as well. On the other side of the coin, we've got silver flat right now, but still well over $24 at $24.50 an ounce. Gold, like I said, yesterday hit a intraday high of 21.71. It's down from that, but up from the close by about 1/3%, 21.66 right now an ounce. Crude oil is heading the right direction, Dave, but still higher than I like to see it. Down 0.5% to $78.75 a barrel.
I never thought I'd see 78 as being a good number, but it was at 79.25 yesterday morning while I was soloing it. I was saying this is too close to 80 for comfort. A few more percentage points down wouldn't hurt my feelings a bit. Overseas markets, the Asian rim was kind of mixed. If it wasn't Japan and China, it was generally up. But Japan, China, the mainland, the Hong Kong markets all off at the close at 6 a.m. this morning. Europe, on the other hand, is looking at 2 days of green ink on our side of the pond and saying, oh, whew, things are looking all right. The overall European index up by almost a full percent halfway through their trading day. Getting my retirement plans down pat so I can afford to retire someday, that really needs to be toward the top of my agenda, but a lot of other people too. How do I find you to get that plan in place?
Hey, that's exactly why I developed the core retirement design to help people design that retirement they always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And back here again tomorrow morning about the same time to tell you what happened today and is likely to affect your money tomorrow here on Light FM. Be well, my friend. I'll see you then.
All right, man. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Have a great day. Talk to you again tomorrow. Take care. Bye now.